What's all this business about Goldbach levels?
The price of Bitcoin is being carefully manipulated. And if I was Satoshi Nakamoto, who holds the most Bitcoin, I would be pushing price to a certain high before I offloaded all of my crypto wallets. In this video, I will show you the price target for Bitcoin, why it's relentlessly pumping to that level, and proof within the fractal timeframes it is moving towards that key price. Now, this is the chart for Bitcoin. And the key thing you need to know is that Bitcoin is being governed by the Goldbach algorithm, specifically the Goldbach power of three numbers. All electronic markets, including crypto, Forex, index futures, silver, gold, oil, they are all priced using Goldbach. If you would like to learn the background on Goldbach, you can click the video in the top right. And if you would like to know the history of how Bitcoin has been interacting all the way through these price targets to our current price, then you can click the video here. Today, I'm going to be focusing on the intermediary top price target, which is $177,147. Now, why are we moving towards this target? It's because whenever the price of an asset such as Bitcoin breaks a power of three number, we then have an expansion and a new price target. So as you know, back in 2021, we broke $59,049 per Bitcoin. Okay, once we broke that number, the next price target became $177,147. And I will show you how that price target has already been priced in many, many years ago, and how it's still using this power of three number to influence price action today. In this way, you could become a crypto millionaire. It's very important for me to show you algorithm 2 first. Algorithm 2 is the easiest Goldbach algorithm to understand. And if you're an ICT trader, you'll start understanding the terminology that I'm talking about. So Algo 2 says price will go from the low, it will pump to the breaker, it will then retrace to the fair value gap before expanding to the bearish order block. Now this might not make sense to you right now, but you can click this video and it will show you a lot more about algorithm 2. Now our price target, because we have broken 59,049, is 177,147. So if we load up the Goldbach indicator and putting in our price target, which is our dealing range high of 177,147, you will then see how price has already been algorithmically obeying Goldbach and the algorithm. So algorithm 2 once again said price starts at the low, goes to the breaker, retraces to the fair value gap level before pumping to the bearish order block. So let's go to a slightly different time frame so price is less jaggy and easier to see. Okay, so this is now the monthly time frame. It's important to understand that the Goldbach dealing range tells us that once you know what the price target is of price action, you know where the ICT PD arrays will form. So it tells you the bottom 3% will be the rejection block. From 3% to 11% will be the order block, fair value gap, liquidity void, breaker, mitigation block, EQ. So these are the bullish PD arrays. And the bearish ones are the bearish mitigation block, bearish breaker, bearish liquidity void, bearish fair value gap, bearish order block, bearish rejection block, and then the higher the dealing range. Now remember what algorithm 2 is. We go from the low to the breaker. Okay, what is this? The breaker. Low to the breaker. Where is the fair value gap? This is the fair value gap partition. So the fair value gap should be here, which it is. Can you see that? It's in the right place. Breaker to the fair value gap. We fill the gap. And now the price target is the bearish order block. Where is the bearish order block? Right here. Okay. So the high of the dealing range is our 177,147. And we expect price to get somewhere in here, if not the high. Do you see the power of Goldbach? Not only is it telling you what the range will be, due to the expansion, once we got past 59,000, price has already been obeying these levels and setting up the fair value gaps in the right place. And now we'll show you how even on the smaller time frames, it is still playing out algorithm 2 using the power of 3 number of 177,147. Okay, so let me do that for you. Now, it's important to understand that all of these Goldbach partitions can be fractalized. So let's now create our fractal ranges. This is the breaker. Now, if you buy Hoppy's book, for which is the link in the description below, you'll know that the breaker is one of those special partitions that can be split in half because it's bigger than the others. Okay, liquidity void is big, the breaker is big, the rest are small. Fair value gap, the order block, okay, the mitigation block. So we typically fractalize the breaker. Okay, once we split it in half, we can then create a smaller Goldbach dealing range within that. Now, I'm trying to be as accurate as possible. Okay. So this is 50% of the range. Once we fractalize the bottom of the range and put in our Goldbach fractalized dealing range, which I call the IPDA, we can start seeing algorithm 2 play out on the smaller time frames, knowing it is referencing this ultimate price target. Okay, so firstly, note how it's respecting these levels. You see that? Wick down, body down, body down. Wick down. But let's zoom into the lower time frames. Maybe the 1 hour. Let's see. So let's have a look at this price action here. And I'll have to write out the labels for you. Okay, let me remove the extensions to make it very clear where the high and the low of the range are. And maybe, let's see if I can do this in red so you can actually see it. Okay. This is the low, this is the high, this is the equilibrium. Okay. So then let's write out the PDAs. Equilibrium. Okay, and then it reverses on the way up. So we know where it goes. This would be the bearish order block, bearish rejection block, and then the high. So what do we have? What did price do? Okay, it went from the low to the breaker. And then where does algorithm 2 say we go from the low to the breaker down to the fair value gap? And do you see how we hit that fair value gap level on the dime? Low, breaker, fair value gap. And where will we terminate? The opposite opposing order block. So we made it to equilibrium. You typically have a consolidation at equilibrium. We are now respecting equilibrium. And we terminated the algorithm at the opposing order block. And then we push through to the high. Do you now understand the power of Goldbach? Now remember, it is running a fractalized algo of 2 In this breaker zone, and because the breaker is basically a double partition, we split it in half, and then we have a fractal Goldbach range. But the key point is, this whole Goldbach range is set by this power of 3 number, the ultimate price target. Once you understand the power of Goldbach, trading becomes so much easier. If you would like to learn more about Goldbach, there's a link to Hoppy's book below. If you would like to learn my time and price trading strategy, which I use for Forex, crypto, index futures, oil, gas, gold, and silver, there's a link to my mentorship below also.